Thanks for tuning into Talking Point. I'm your host, Neeraj Shah. No amount of conversation post the budget on manufacturing and infrastructure is enough. And the company that we're talking to today is amongst the leaders in the segment that it operates in, not just in India, and aspiring to be the leader globally, if not already. GMM Pfaudler is the one that I'm talking about. And Tarak Patel joins in right now to talk about how does he see the next 12 to 24 months, especially in light of a post-budget world for India. And of course, how is the globe shaping up for them now that they are also the majority holders of Pfaudler, which is the JV partner that GMM Pfaudler is a part of. And he joins in right now on the show. Tarak, good having you. Thanks so much for joining in. I don't know if I got all of that correct or no, but with the presumption that I did, just tell us about how is the landscape right now for business, considering that almost everybody believes that if the runway was smooth, the budget only added some boosters to anybody who wants to speed.
Yeah, hi Neeraj, and thanks for having me. Like you rightly said, we just closed the transaction to acquire the global business of the Pfaudler Group a few days ago. So definitely a significant change of scale and size for GMM Pfaudler, a true Indian multinational company going forward. Exciting times, but as you know, and I've spoken to you before, the hard work really starts now. We need to keep our head down and make sure we work really hard to turn around the international businesses. But nevertheless, a big step towards what we aspire to be, the global leader in corrosion resistant equipment and technologies. So definitely a step in the right direction. So from our standpoint, the last couple of months have been quite strong. I think both in India, the chemical and pharmaceutical industries are continuing to invest. We are seeing a lot of local manufacturing picking up in the pharma space, especially intermediates are getting manufactured now locally that were definitely a resurgence in the pharma sector, which we are catching on to. And then obviously chemical always has remained strong as well. So chemical pharma in India, GMM Pfaudler continues to do very well. Our order intake remains very strong and robust. Obviously, Q4 is going to be a very good quarter for us. And then going forward, we have enough of orders to take us into Q1 and Q2 of next year. What's also been very heartening, Neerav, is that we've actually had a good amount of order intake in the international business as well. So that Pfaudler companies around the world have seen significant order intake, which kind of ties in with our earlier thought process that international countries in Europe and the US are also creating local the redundancies. They are trying to kind of de-risk their India and China situation as well. I think from that standpoint, I think the future looks very bright for the Pfaudler Group's international business as well.
Sorry, tell me, you benefit from this China Plus One strategy? Are companies talking of doing that and approaching you?
Yes, so we are seeing definitely a shift of manufacturing. There is also now the PLI scheme that's been launched. The central government has also earmarked, I think, 3 locations for local pharmaceutical manufacturing. I think the first one coming up in Hyderabad, the Pharma City. But China definitely seems to be, an area where Indians are no longer buying as much as they used to. I think we've seen a lot of the second-tier pharma players here adding capacity and really increasing their intermediate play. Not only that, we're seeing some of the big chemical companies as well who are now diversifying into intermediates. So it's actually a shift that is going across the board, and I think that's going to bode well for investing here in India and building capacity as well.
Okay. So since you started off with that transaction, Tarak, can I just quickly get that out of the way before we talk about what else stays in store? Now, you had corrected me when we had spoken last, when you had mentioned that this whole acquisition happens without any equity dilution, so to say, for GMM Pfaudler, the listed entity. And you'll be able to consolidate the numbers once the transaction is consummated. So tell us, how does the trajectory change from what you've been reporting thus far in FY20? I believe you reported 590 odd crores. I believe this just changes the numbers landscape for GMM Pfaudler quite considerably, right?
Right. So on a full year basis, we'll go from something around 600 crores, like you said, to about 2,000 crores. Pfaudler International is about a $175 million business. We will start consolidating from February and March of this year, of this Q4 rather. So then you can calculate and see what kind of revenues will flow into GMM Pfaudler. And then obviously from April 1st, we will get the full consolidation. So the entire business of the Pfaudler Group gets consolidated into GMM Pfaudler here in India. And like I said earlier, it's a significant change in size and scale, especially for a manufacturing company in a niche business like ours. The size and scale will now be quite significant.
And wondering, Tarak, when the last time again that we spoke, which was early days for you to make this acquisition, you had guided to what seemed to be a rather modest, impressive, but modest numbers for FY24. Now that some water is passed under the bridge, there is traction in India and globally as well. Are you kind of laying out any figures or revising any long-term figures for GMM Pfaudler, the listed entity, consolidated numbers?
So you have a good memory. So yes, I think the guidance remains as is as of now. It was about 2,800 crores with about 16% EBITDA margin without synergies. Having said that, GMM has seen a significant improvement in the margin profile in the last 3 quarters and will continue in Q4. So that's already an upside that we are seeing. I think there could be a revision, an upward reversion in terms of margin profile. Probably, once we consolidate Q4 numbers, we have some amount of consolidation, done already. We will then come back and probably revise the estimates.
Yeah, because I just look at it, Tarak. The margins in the GL segment, right? They surprised very, very positively in Q3. And the mix, I believe, skewed towards larger reactors, maybe helping that. So tell us, how is the near term looking, and what can drive this? Is this a sustainable drive upwards on the trajectory for EBITDA margins?
Yeah, so we've seen already maybe a 400 bips, 500 bips improvement in margin this financial year so far. So that's a significant improvement, like you rightly said. Going forward, we do expect that to continue. Some of the initiatives that we are now or have just implemented, for example, the 2 new gas furnaces in Gujarat, which have come online in October. We have now the Hyderabad facility. We'll end up having more export business coming from the Pfaudler Group as well. We now have access to new markets like Southeast Asia, Middle East, and Africa, which were. We also have cross-selling opportunities where the Pfaudler Group will sell GMM Pfaudler products into the European and US markets. And, we've also planned to bring in a good amount of products into the Indian market. So one such product is an interseal that we're planning to bring in. So again, all these initiatives, if you couple them together, I think there is definitely room for improvement for both revenue and profitability. I've spoken about businesses like acid recovery. Happy to report also that Pfaudler recently received their first order, a $6 million order from Russia for acid recovery. So we're seeing a lot of these kind of initiatives now playing out. And the idea was to kind of do this transaction before all these things start flowing into the new business. So we're quite positive. And if everything falls into place, I believe that margins will be sustainable, and we could even look at improving them in the short term.
Okay, Tarak, a couple of further questions. One is on the overall business momentum. Now, I remember April to June and July to September, you were amongst the companies that didn't really have a down month or a down quarter of sorts, right? You kind of sailed through this whole pandemic pretty smoothly. So the base effect will not be there. But the base effect notwithstanding, what are the conversations currently? Because you rightly said, specialty chemicals, every company that I speak to is talking about further expansion because of the domestic market and the export boost. Pharma, we all know what the story is as well. Contract manufacturers are getting into API manufacturing as well. So just tell us about what's the nature of the conversations. Are there larger contracts that are coming your way because you are a niche player and you are probably the only one in the space that you are in? So give us some flavor about it.
Sure. I think very similar to what you said. I think from whoever we speak to, owners and even managers of these big conglomerates now, everybody is probably looking at investments. There are new products that people want to manufacture here in India. People want to create redundancies or kind of backward or forward kind of integrate as well. So I think across the board, the sentiment is definitely very positive. I think people are going to invest. We are currently talking with, pharma companies for big, large size projects, doubling or tripling the capacity. So I think across the board, we're seeing, a good amount of activity. I mean, not only that, one of the things that is also very heartening, and I mentioned this earlier, is that internationally, we're seeing a good amount of rebound as well. So our Swiss subsidiary, Mavag, which is about a 13 million, 14 million Swiss franc company, currently has a backlog of about $21-22 million, the highest it's ever had, right? So that's significant for that size and scale again, and that this is going to block them out for another year or so. So even from that standpoint, and similarly within the Pfaudler Group businesses as well, we are seeing the pharmaceutical definitely pick up. So I think as an industry across the world, especially here in India, there's a good amount of positive sentiment, and I think that's going to continue at least for the medium term.
And I think you already mentioned this, but I'm just asking this because you mentioned Mavag. I mean, because those margins had, I believe, come off quite a bit in Q3. You believe all of these order executions over 1 year, whether Mavag does it within itself or otherwise, will all happen at reasonably higher operational metrics, both because of internal control and because of the pricing advantage that you might have?
Absolutely, absolutely. So I think one is obviously there'll be a significant larger revenue base, so the flow through will improve. And really, if you ask me today, my focus, and I think I mentioned this to you last time as well, is really on execution. The orders are coming in. We got to now really focus on turning and shipping material and equipment out the door, so that every quarter we build on that momentum. So I think that's really now the focus for the business, is to really ship rather than worry about order intake.
Okay. Final question, really. I presume, actually, final couple of questions, and both of them are on numbers. So Q4, I reckon materially will look different because the console numbers come into play. One word thereof, if anything, you can speak about it. And part two of my question, I'm a bit curious, Tarak. A world leader in the equipment that it is manufacturing is guiding to a CAGR number of 9.5% only. Are you being modest when you're talking about moving from where you will be in FY21 to where you will eventually be in FY24 at 2,800 crores?
Yeah, so for just answering your first question on the Q4 numbers on a GMM standalone basis, I think this is going to be a very strong quarter for us. March ending and the Q4 for manufacturing companies is always very good. So I think across all our business lines, heavy engineering, proprietary, and the glass-line business, you'll see a significant amount of improvement and growth, and that's going to continue into. For me to comment on the consolidated numbers, obviously, there will be 2 months of consolidation. We've really just started work on that right now. So maybe in a couple of months, we'll have more of a clear picture, but right now, a little bit too early for me to comment. In terms of growth, yes, I think we are being a little bit conservative. I think that, these markets internationally have seen a bit of slowdown. This pandemic obviously has changed things significantly. I mean, the new world order, people are now kind of looking after themselves first before looking out of other people. So I think that has changed dynamics quite a bit. Really need to wait a couple of months to really tell you that is 9.5, 10% global consolidated CAGR good enough, or will we see some improvement there? But on an India basis, definitely, I can definitely vouch and say that this level of growth will continue. I don't see this slowing down for at least another 3 years. We're talking to owners and managing directors of companies, and they all are very bullish across the board.
Okay. Well, maybe at the end of Q4 and starting FY22, we'll be able to get a better picture of how things are shaping up. But congratulations on the ability or the permissions to kind of take control of Pfaudler Inc. As well, Tarak. And thank you so much for speaking to us today.
Thank you very much. Very nice to be with you, Neeraj. Thank you.
Likewise. And viewers, thanks for tuning into this edition of The Talking Point.